Good morning, Predicted Trades family. Hope everybody is doing well. So we got a little gap down we're dealing with this morning. Good old OPEX week. So far we dipped down to the daily 8, ran back up, had a little gap up pretty much to 4,200 and near the top of the 4-hour squeeze, where we reversed back down into range off of that gap up. And here we are, back down at the bottom of the range. Again, it's OPEX week. And in a way, we kind of had our range set from last Friday. You could even say last Thursday to Friday, where we could pull back down to the lows from Thursday or Friday and still be in a somewhat bullish setup. Overall, with OPEX, market makers are trying to keep us sideways and range bound. But we see that we can hit the extremes of the range and fall back. We might hit the lows and pop right back up. If we look over on the daily, we're still very bullish, holding above our daily moving averages, trying to push higher through our 4180 to 4200, which is a zone of rejection. If we look on the daily and just look left, this 4180 right here up to 4200 has rejected a number of drives up to try to head higher. So not surprising that once we're back here, we're messing around, we're running into that zone and coming back out. And we could likely run into that zone again and keep trying to push through this wall of sellers to finally break out back above 4,200. As you can see, we do have a 2-day squeeze that's getting thinner and thinner, like it's ready to fire. So as long as we hold our daily moving averages and keep trying to press against the sell wall, the thesis is trying to break out, fire this 2-day squeeze, get above 4,200, and, get through what has been resistance to start heading back up to something like August highs. Now, could we continue to reject and start to have another pullback to set yet another higher low? If we look, we back in October of last year, set the lows near 3,500, and then each pullback has been progressively higher lows as we wedge on the daily, as we have taken out the trend line from the highs of last year, pulled back, retested, and now we've come back up to the same rejection point that had us retest the trend line from last year's highs. So overall, still very bullish. And when we think about a pullback after a good run, we can easily pull back to the daily 50 at 40.50, the daily 200 near 39.70. And if we hold there, that is still yet another higher low. Overall point being, we might get a reversion back to the mean or back to our other daily moving averages. And still be holding up a bullish structure. All of our daily moving averages are stacked in a bullish direction. The 8 is above the 15, is above the 21, above the 50, yada yada. So just want to point all that out so that we're cognizant. We are running into a very critical sell wall that has caused rejections on every run up since October. Ultimately, if we can't get through, we will have a reversion to the mean. We will try to set a higher low and then start another run. Or if we lose that daily 200, we will come down to test those recent lows. And it's always interesting to note when the contracts change over, right? This vertical green line is marking the quad witch that we had, where every quarter these futures contracts shift to the next expiration, right? And we can see we sold off into the end of the quarter. Now we've rallied right back up. We still have plenty of time left in this quarter. We can afford a little pullback to one of these daily moving averages and come back to test, getting through this all before the quarter ends. But, point being, overall, this quarter, we are net long. Should not be too aggressive to the downside. That doesn't mean I don't call out puts every day when the time is right, when it looks like we're going to have a pullback. But overall, let's dig into, we've spent enough time on kind of the macro view. Let's dig into where are we today. We fold back down to the daily 8, which has stepped up to this 41.55. We also have the daily Ichimoku cloud top sitting at 41.55. I'm not going to pull it up, but our very good friend and fellow trader Richie pointed out this morning that we have our daily Ichimoku cloud top at 41.55, meaning we have fought above it. Now we're pulling back to try to hold it. And it's a big, fat level that exists for a while. So we could easily find our support here at the daily 8 at the Ichimoku top. But we are in a downtrend from the overnight. And even though we could hold here at this 41.55, there are other key levels below. Namely, we have POC at 41.31. If we come over to our handy-dandy watch list, and let me extend this over, just there we go. In our watch list, we can see POC still sits down at 41.31. All that means is if we put our cursor on 41.31 and look left, we had a lot of volume exchange hands at that level, especially on these lows to take off. That 41.31 is still our point of control. So, point being, we are getting close to the bottom of a 4-hour squeeze. It's very thick and OPEX is in effect this week. So overall, that 41.31, or if you want to just make it simple, call it 41.30, up to 41.36.5 is our overall zone of support. I can accept a dip down to that zone and then buyers stepping in to get us back above this 4-hour squeeze bottom and try to rally back up through this range. So overall, we could very easily hold up at these pre-market lows at 41.55, but we are in a downtrend. We never quite know where that trend is going to reverse until we start to see the signs that they're stepping in to reverse. So let's see if we can hold 41.55, 41.50. If that zone starts to give out, we are coming down to 41.42, 41.36.5, 41.30. Three critical levels that create a very nice, pretty kind of equal zone right at the bottom of this 4-hour squeeze. So we could very easily drift down here, settle, and then start to turn back up at some point in the day and start another drive up to stay in this range between basically that 41.80 and 41.36.5. These are two very, very critical levels. Last year, at one point, 41.36.5 was the low of year that held us up January and February of 2022. 4180. We have resisted a number of times on these rallies up. So we're in between two critical levels. If we can't hold that zone, 4130, 4136.5, we are absolutely coming down to test the daily 21 and our zone here around 4100, 4108. But as long as we can continue to hold up, looking for us to try to fight back up to test that 4180, 4183, 4190, 4200, right back at the top of that 4-hour squeeze. The whole point of these squeeze clouds is once a squeeze sets in, they love to hit each extreme of that squeeze before they let it fire. So we got up near the top of a 4-hour squeeze as it was forming, rejected down. Now we are near the bottom of the 4-hour squeeze. Can we hold up here at this 41.55? Yes, but overall, getting this close to that 4-hour squeeze bottom, I'm expecting a little further down to hit these key things before reversing back up. So, if you want, draw your trend lines or whatever. Once we get there, I'd be taking shorts back down. If we get through, hold on a retest, I'd be taking calls back up. Also, if we do hop into shorts and it comes down here, I would be locking up most of my shorts and starting to build a long position again. So, overall, I think we have our targets to the upside, to the downside on ES. We have our key levels, daily moving averages, we have our squeezes. Ultimately, when a 4-hour squeeze is this thick, we can just look back and see. We reverse back and forth when they're nice and thick. Then we start to push against one, and usually a gap up starts to fire it, right? So, can we slip through this big fat cloud, hit some of these key levels, pop right back up, and that squeeze is intact and we reverse back up? Absolutely. Can we start to lose this zone and then fall back down to these critical levels, which will cause that 4-hour squeeze to thin out through the day and fire? Absolutely possible. But we overall have to have a lot of sentiment and momentum and sellers pushing us through what should be support today. So that's about it for ES. We have our targets. We're ready to go. One last point I'll make. This is a chart that I cover a lot of most days, but it is the 45 EMA from every intraday time frame that I like to track. So, I think we've got a 5-minute, a 15-minute, a 30, 1 hour, 2 hour, 4 hour, yada yada. Overall, we've been bullish and we've just pulled back to sit on the 4-hour 45. For me, a 45 EMA is kind of the mark for a change of trend, given any time frame. So we've basically just pulled back on the 4-hour right to that 45 EMA. Can we take a little dip down to tag a zone and get back above it and keep our bullish sentiment? Yes. But overall, just showing that trend-wise, with my rule about the 45 EMA, we're still bullish, we're still stacked. Even this gap down is just getting us back to testing that bullish orientation. So as long as we hold and get back above 41.55 for our close today, we're still bullishly stacked. We can ramp right back up off of this level. All right, moving on. Let's get to NQ. So NQ, as you can see, look at the range. We have pulled right back down near the bottom of that range. Overall today, it's all about holding 13,000. The daily 21 sits at 13,000 and some change. And it's worth noting that on NQ, POC sits up at 163. So we've already reverted back to POC. We're going to be opening below it. And as we look at each name, like Ruddy, we were already at POC and we're below it. YM, we were above POC. We have pulled back to POC, which is 33,991. We're at 34,000, and we did get down and tap it. So as we look at the other indices, they have already come back to test their POC. Let's see today if all of those indices are also going to take a little dip down to like their daily 21 so that ES can get to its POC for a test. That would be the scenario on ES where we give up that 41.55, come down to 41.36.5, 41.31, so that all indices have interacted with their POC before a potential run up. So, for today on NQ, 13,000, very big, very critical. Want to see a hold, get down there and tap the daily mean and hold this 4-hour squeeze bottom to pop back into range for OPEX. It sets up for a potentially very bullish week next week if all those things hold. Obviously, if we break that 13,000, that daily 21, then we're going to come back down to test these recent lows, this little zone below, and should that give out down to 12,900. But if we can hold 13,000, reverse off this 4-hour squeeze bottom, we're trying to play back up through the daily 8, daily 15, around this 13,150, and then back up to where we sold off from yesterday, near 13,250, 13,300. On to the ready. Oh, very similar. Got up near a 4-hour squeeze top. Now we're opening close to the bottom, trying to hold our daily moving averages. If we lose that 1790, we're going to come down and test this 1780, 85, where the 4-hour squeeze sits. If we can hold there, or right around this daily 15 near 1790, looking for a reversal back up over 1800, 1805, where we kind of topped out overnight. And then trying to fight back up to 1820 and the top of that 4-hour squeeze. Obviously, we start to fall through 1785, 1780. Then we want to start targeting down to 1760 to 1750. But just think about range, right? Like I said, last week, we started to set a range coming into OPEX, and we are respecting that range. So when we get near these lows, I will take shots long, just on the simple thesis that we stay in range for CHOPEX, right? Moving on to YM. Just like NQ holding 13,000, YM sitting right near 34,000, a hair below right now. Overall on YM, really want to see us try to hold 33,900 in the bottom of this 4-hour squeeze. Get back above 34,000. And if we can do that, then we'll start to try to get back to 34,100, 200, and where we topped out near 34,300. But if we start to lose 33,900, we want to target down to 33,800-ish where the daily 15 sits, and 33,600-ish where the daily 21 sits. Again, that would just be pulling back to this consolidation from a couple of weeks ago. Still very bullish and whatnot. So let's see if these 4-hour squeezes stay intact on all the indices. With it being OPEX, I kind of expect them to. Alright, let's burn through all of our names. Apple. And the common theme among every name is going to be, 4-hour squeeze is intact. play this range until it breaks. When we get down near 164, I'll be taking longs back up to 167. If we get up near 167, I'll be attempting shorts right back. We are stuck in these 4-hour squeezes during an OPEX week. We need to manage our expectations. So watch that 164 for a look long. If we give out 164, we're headed to 163, where that's where the 4-hour sits. It's a 2-hour. So we got a 4-hour squeeze at 163. Should that give out, down to 161.5, where the daily 21 sits, and down to 160, our lows that have been setting in this base that started to ramp back up. But if we can hold this 2-hour or 4-hour squeeze bottom, then it's a ramp back up to 165, 166, 167, 167.5, where we've been topping out, with the overall goal of breaking out and getting up to 170, where the third Keltner sits. When we talk about like the daily Keltners, third Keltner up or third Keltner down is an overbought or an oversold indication. So, wouldn't be surprised with the whole sentiment of sell in May and go away that we see a rally on a number of tech names, especially going into their earnings, after earnings, where they get up near their third Keltner, everything's looking strong, and then we have a decent pullback. Just one scenario to think about. Moving on, AMD. Still stuck under this trend line. Started to break it yesterday, fake break, right back down. But overall, holding the base that we have set, the low from Monday. So basically we want to watch this 88, where the daily 50, this purple line coming in, now sits right near Monday's low. Likely going to get down and test that 88, that daily 50, in the bottom of this daily squeeze. Looking for a reversal right about there to come back up and test this trend line around 90 to try to get through. If we start to lose that 88, that daily 50, then we're talking back down to 86, 85, and that would be firing this daily squeeze down. Moving on, Amazon. Amazon with a 2-hour squeeze and a 4-hour squeeze that's starting to form today. The bottom of that 4-hour squeeze right around 100. And if we look left, we tried to hold 100, it tried to hold 100, repeatedly slipped below. So we could retest 100 to do a little bit of an inverse head and shoulders. Technically, Amazon's looking decently strong this morning. Let's see how that 102 test goes. Could send it back down to that daily 21 that we almost tapped at the pre-market low. That 100. Overall, note the downtrend. Wouldn't be surprised for a rejection of 102, a dip down to 100 and 100.5 where the daily 21 sits, 100 where the 4-hour squeeze sits. Little zone of support that they might just want to get down and test during the cash session before ramping back up. Should that give out, that 100, those squeezes fire down, we want to target down to 98, 97.5 recent lows. But if we can hold up, we want to target back up to 102.5, 103.5, with the goal of getting up to 105 at the top of the daily squeeze. Google. Still weak after that Samsung news, but overall, not tanking, right? Draw your trend lines. If we break above, let's say, 105 today, we've gotten out from under this news, and Google could start to make a nice move back up to this 107.5. Overall, made it back to the daily 21 and this 103 key level right at the bottom of a 4-hour squeeze. And if it's a quick note, if it seems like way too convenient of a coincidence that I have a key level at 103, now we have a 4-hour squeeze at 103, that daily 21 sits at 103 and some change. It's not a coincidence. These things happen very often where a daily moving average gets up near a key level. As we start to get to that key level, something like a squeeze starts to form. That's why I track these specific tools, because you get some interesting confluence. So overall, if we can hold 103 today, bottom of the 4-hour squeeze, get back above 103.75, let's call it, where the daily 21 sits, it's just been a reversion to the mean, a hold of a critical level at a squeeze bottom. We can see a great reversal back up, get out from under the trend line of this news, and see an interesting recovery. But overall, if we lose that 103, you want to target back down to 101 where the daily 21 sits, 100 where the bottom of the daily squeeze sits. Right in the middle of that daily squeeze. So let's see if we can hold that 103, start to reverse over, call it 105. That'll get us through the downtrend from that news that hit. And of course, news hit right at the top of a daily squeeze. This is all a coordinated dance, and I'm just trying to show you how it can play out. Moving on, Meta. Obviously coming back down along with Google. Overall, XLC loves to move together. And going to be opening right at the bottom of that 4-hour squeeze. We have the daily 15 just a hair below at 213.5. We have the squeeze bottom right around 214.5, 215. So basically looking to hold this zone. We start to lose 213.5. It sets us up for coming back down to 210, where the daily 21 sits right near some recent lows. But if we can hold up above that 213.5, start to reverse off the squeeze bottom and get back over 216, then it can easily be a play back up to 218, 220, 222, where we topped out back at the top of that 4-hour squeeze. Oh no, don't start freezing on me, Toss. There we go. Every so often that happens. Microsoft coming back down to 286, 285. Key little zone to try to hold at the bottom of this 2-hour squeeze. If we start to give that out, down to 283 in the bottom of the 4-hour squeeze, and 282 where the daily 21 sits, right near some recent lows. But if we can try to hold up that 285, 286, reverse off the 2-hour squeeze bottom right near this daily 15, then it's a play back up to 289, 290, 293, where we topped out up at the top of this 4-hour, 2-hour squeeze, with the overall goal of trying to get up to this 295 at the top of the daily squeeze. Obviously, we start to give out that 285. We want to probably play down to about 282, where the daily 21 will be sitting at the bottom of that 4-hour squeeze, below 282, 280. Netflix reported earnings. Look at all these stacked squeezes. So Netflix with a big reaction down and then right back up, still holding up near the 320s. Overall, let's see, 322, looking for that to hold. Daily Keltner right in the bottom of all these squeezes. As long as we hold 322 to 325, looking to play long back up to the top of the squeeze, back up to 340 with the potential to break out. Why long? Well, We did have that negative reaction, but we're right back up. We have seen Netflix tank from 330 down to like 260 and open down there. And in those cases, we leave Netflix alone. Whenever it tanks on earnings, we leave it alone for a few weeks. We let it settle before any attempt to play it. But we're opening basically flat. So what's going to happen is premium crush. What that means is they inflate the premiums, the price of options contracts going into earnings, so that it's a little harder to make any money. Now we're going to be opening virtually flat. So everyone that bought all of these puts and everyone that bought all of these calls are going to experience premium crush, where options like, let's say, the 310 or 300 put were probably expensive yesterday, $2 or $3, $200 or $300. They're about to open at like 50 cents. So what we want to do today on Netflix, this is one of the big key names to watch today. We want to see where some of the closer calls, like the 335, 340s, where they open, 345s, 350s maybe. They could be opening directly in Beast. We are at the bottom of a squeeze. Could set up a great play. We also want to keep an eye on something like the 310, 300 puts, maybe even 315s, because those will be opening close to Beast, maybe in Beast. So we want to watch both and see what are they loading into. At the bottom of this squeeze, if a number of these close calls are landing right in Beast, and we're holding that squeeze bottom, definitely going to take a shot to the upside for us to get back up to this 340, 350 to head higher. But the last caveat, OPEX weak, stank squeezes, could very much be that we hold, start to get going, reverse back down. There's a little bit of a fight. I know that that may sound a little like I'm contradicting myself. Overall, not tanking on earnings. The earnings report looked actually pretty decent. I'm looking for a long off of these squeeze bottoms to get back up and try to break out. But if we start to lose 320, that will tell me that the overall sentiment is down, and I'll switch over to the puts and play it back to that 306 and 300. On to NVIDIA. Gapped above this little zone and held it yesterday. Now we've got our 4-hour squeeze, 2-hour squeeze sitting there. So overall looking for 271 to 272.5 to try to hold today on NVIDIA and reverse it back up through this little downtrend to get back up to 275, 277, maybe even back up to 280 where we topped out. We start to lose this zone, 272, 271.5. Then we want to target down to 270 and 265 where the daily 21 sits. QQQ. So we got this little zone of resistance at 320. We opened above it, right near squeeze top, fell right through. Hopefully you guys are seeing why I covered these squeeze tops. When we have this gap up yesterday, right to squeeze tops, what I was telling everyone in the room was, careful long, it's likely a pullback to a partial gap fill, if not a full gap fill. And pretty much on every name, we got a full gap fill. And as we can see, on an OPEX week, they gave it one nudge down, straight sideways. After that drop, trading was pretty difficult. To try to get anything going to the call side, to the put side. Welcome to an OPEX week. So, overall, very interesting wick here. Maybe a little bit of a precursor to say as long as we hold this squeeze bottom, we might try to get back up to test this wick and fill the gap. So overall, looking for 315 to 316 to hold on QQQ today in this squeeze bottom. We lose 315, we're down to basically 314 to test the daily 21, and our zone below at 312, 311 and a half. But if we can hold at 315, 316, this big fat 4-hour squeeze bottom, then it's a reversal back up to that 317.75, the top of this wick, and kind of where we closed at 318.75, 318.80, with the goal of maybe getting back up to test this 320 zone that we gapped above and then fell back through. You can see we rejected it on Thursday and Friday. Very much in range. Let's see if the range bottom holds and sets up a nice long back up. If that range bottom doesn't hold, it's back to daily moving averages and zones below. On SPY. Just like ES, about to be opening back at the daily 8, back near the squeeze bottom. And let's see, we dipped down to 410 on Friday, right? And held and went up. So ultimately looking for 410 to 411 to try to hold. That is Friday and Monday's lows. If you were to connect those two and make a zone and send it over, it is basically that 4-hour squeeze bottom. So that's the support today, looking for that to hold and to replay longs back up off of that through 412 and back up to 414 to fill the gap. We start to lose that 411, 410. We want to target back to these daily moving averages that have been sitting so far below on SPY. So back down to 409 and 407. 409 where the daily 15 sits, 407 where the daily 21 sits. Tesla reporting earnings after the bell. Been very much contained in this zone between 190 and 180 for the last couple of weeks. Overall, looking for this recent low near 176 to hold, as we are going to open below 180. If 176 can hold, looking for us to just get back and settle near 180 going into earnings. Overall for earnings, if we have a negative reaction, it will likely be down to this 2-day squeeze bottom right at these key levels, 166, 167 and a half. If it is a positive reaction to earnings, looking for a fight back above 190 to get back up to 200, 205 at the top of that daily squeeze. And 210 where the top of the 2-day squeeze sits. But lots of squeezes on Tesla, going to help us understand which range or which direction we break this lower time frame range, like the 2-hour, 4-hour squeeze, to get down to these daily 2-day or up to the daily 2-day. But overall, I'm not going to be touching Tesla today. Going to wait for earnings. We might get another interesting premium crush where Tesla ultimately opens flat and in this zone. And it could set up for an interesting Thursday, Friday for OPEX. Finally, VIX. Having a little gap up to its daily 8 and rejecting. So just like the market pulled back to its daily 8 and trying to hold, VIX popped up to its daily 8 and rejecting. So good sign there for holding squeeze bottoms and upside thesis. If we can hold those squeeze bottoms and reverse up, looking for VIX to stay below that pre-market high, below that daily 8, at the very worst below 18. We can see the top of a little 4-hour squeeze, a little 2-hour squeeze sitting near 18. So looking for us to stay below 17.7 and 18, reject there, and head back down to fill this gap, down to 16.8, 16 and a half, back down to the bottom of that squeeze. But if we are going to dip down for ES to hit POC today, and maybe give out POC and ES get a full reversion to the mean, then we're going to see VIX fight back up to this 18, likely get through, and then try to fight to 19 where the daily 21 sits to get back to this balance range above. Let's note 18.5 as the bottom of that balance range, just in case we do see some extreme selling that gets us to 18.5 and then a quick reversal back down. That's a rejection of that balance range, still very bullish, yada yada. So we've got our targets upside downside on VIX. We'll do one last check-in on ES. Starting to set new pre-market lows near that 41.50. So again, folks, downtrend. Don't want to fight trend. Could we have held at this 41.55 and start to ramp off of that? Yes, but we're starting to get below it. So we want to be patient and potentially play this downtrend down to that zone below and that squeeze bottom. Remember 41.31, but 41.30 we'll call it this POC, 41.36.5, very critical level. So let's see if they want to take it down to those before reversing back up, or at least holding and slow ramping. But that's it for prep today. Hopefully everybody found this helpful. If this is your first time tuning in, there's a link in the description so you can join our Discord server for free and start to learn our system. We have an indicator that we share every single day that works on your options, equity, futures, even internals, one tool to rule them all. So definitely come in and check us out. Every Thursday is a free Thursday where you can test out this tool on your options charts. So tomorrow, hope to see all of you folks that have not yet joined in the chat, testing out the free tool. Hopefully everybody found this prep helpful. Good luck today, and we'll see you all in the chat.